For Bernard Madoff, that day of reckoning may not be far off. If found guilty, the man who's alleged to have told employees that he was finished could spend up to 20 years behind bars.
OK, let's go live to the chairman of the Commons Treasury Select Committee, the Labour MP John McFall, and to Philip Auger, who's formerly head of securities at Schroders and the author of several books about the city. Well, Philip Auger, first of all, how on earth did he manage to keep this hidden for so long?
Well, I think we'll discover the details of that in due course. It is a very, very extraordinary story. One of the amazing things is that there are various levels that you might have expected to get this. The regulators might have spotted it, the firm's auditors might have spotted it, the firm's internal auditors might have spotted it, the firm's clients might have spotted it. None of them saw some, what now look with hindsight, have been some very obvious warning signs.
Do you, John McFall, regard this principally as a failure of regulation?
I think, as Philip said, it's a failure of lots of people, but I would describe it as dumb and dumber. How is it that we get institutions like the Royal Bank of Scotland, Santander, HSBC not doing proper due diligence and oversight on behalf of their clients? These are big questions that have to be addressed to these companies, and I hope and intend to do that in the new year when the Treasury Committee has our banking inquiry.
Have the banks and others who've put money into this arrangement, have they failed in their duty to make the proper checks, Philip Auger?
I think that's a pretty stiff allegation to make, actually. I think that professional investors are entitled to expect a certain amount of prudence and a certain amount of control from what, after all, are regulated bodies. I think really responsibility for this one lies in North America, and you've got to look at these warning signs that were there. This was a fund that had been delivering above average growth for a very long time. It was a fund that didn't seem to have a bad year. That should make you suspicious. It was a big fund that was audited by a very small firm of accountants. That should make you suspicious. It was a firm that actually did lots of market transactions through its own, its fully owned broking arm. There are lots of warning signs, actually, which I do feel the various authorities and auditors in the US should have picked up.
When did this first come to your attention, John McFall?
It only came to my attention today. Indeed, I had the Financial Services Authority in the committee today looking at issues such as treating customers fairly with regard to financial services in the UK. So it's only today. And actually, what Philip says actually backs up my point. If there were so many areas which were open to question, then you expect sophisticated investors to do their due diligence and to do their oversight. And I think this tells you something about the hedge fund industry, which is very lightly regulated and which could be interpreted as soft regulation. And the warning signs weren't heeded, and I think we've got to have a fundamental examination of why that was the case.
But assuming those who were making the investments knew what they were doing, why would they take a risk?
Well, actually, Glenn, I've had chairmen of investment banks before my committee, and when I asked them if they could explain a complex derivative, one of these financial products, they told me that they weren't there to explain that. In other words, they didn't know what their companies were investing in, and investors, they equated that complexity with security. So nobody knew what they were investing in, and this is the core of the issue. And despite them being supposedly sophisticated investors, it's obvious they didn't have a clue.
Is there much more of this to come, do you think, Philip Auger, either in America or perhaps in the City of London itself?
I think it's very likely there will be further cases. I mean, what's happened in the last 7 or 8 years, we've had markets going steadily up, and when markets go up, you can actually get away with all sorts of things. If you make a mistake in your trading, then don't worry, the markets will bail you out because prices go up day after day. If there's a little bit of a slip up, no problem, the market will get you out of difficulty. Of course, that all came to a juddering halt about a year ago, and I think that we will see mistakes exposed, and I've no doubt we will see further examples of greedy individuals like Mr. Madoff, who've really just been cheating, frankly. Yes, I'm sure we'll see more.
John McFall, are the systems we have in place in this country robust enough to root out this kind of fraud?
No, actually I don't think they are, because the hedge fund industry itself, when the Treasury Select Committee investigated private equity, undertook a code of practice. It's a voluntary code of practice. The discretion regarding disclosure is there for the fund managers, and I think that voluntary element, the lack of disclosure, the insufficient transparency in today's market is not enough. It's a new paradigm for the financial services industry that we are looking at. The model is bust, and we have to start again, and I'm sure Philip Auger will agree with me on that.
Well, Philip Auger, where do we go from here, and what will the consequences of this be? I mean, will the hedge funds themselves collapse as people pull out their investments for fear that there are other problems?
Well, I do agree with John. I think that that the model is bust and it needs fixing pretty quickly. Secondly, I think we have to move to a completely different attitude to regulation. What's been happening in the hedge fund industry in Britain and in America in the last few years is that if the regulators threaten to get heavy, the hedge funds say, oh, don't do that, we'll just move offshore. And in a desperate attempt to keep hedge fund money and jobs in Britain or America, the authorities have just said, okay, carry on, do what you like, it'll be light touch regulation, so that's got to change. The third question you asked, really whether hedge funds, whether that industry is over. I doubt it, actually. I think hedge funds will change in character. It's going to be a much smaller sector than it has been in the past, but I think it will continue in some form, perhaps with less exotic fees, certainly I hope with more regulation and obviously at a smaller scale, but I think it will continue in some shape or form.
Philip Auger, thanks very much indeed. John McFall, stay with us for more discussion in a moment. First though, let's cross live to New York. The BBC World Service business correspondent Michelle Fleury is there with an update on